All right. By popular demand. Yes, I heard your pleas. I heard your requests. I received all the form submissions. I saw your comments. I saw your extensive amounts of outreach. There's just unreasonable amounts of demand brokered by our coverage of liberal financial, and us being one of the first to cover liberal financial, but I would assume also in a lesser degree. People believe in our coverage and they like our coverage and they like how detailed we are when we go into covering these various cryptocurrencies. And it's here. You've asked for it. It's here. I understand how you feel and I understand that you were impatient and I got all that. And I need to put some stuff up front. And I apologize for those that are chomping at the bit impatient, but I think it's important that I lay some things to rest up front because I consider myself somewhat clairvoyant, possibly not as much as Mr. Segala, the clairvoyant of cryptocurrency, but I do consider myself clairvoyant of the ways I can read your mind. I can read the mind of roughly 85% of you that are listening to this right now. I already know what you're thinking, and I'm going to break that down, and you're going to be shocked at just how accurate I was with my predictions. Let me go to the list, and this is going to be my T's and C's, my terms and conditions for how this coverage is going to go, because it's important that I lay it to rest because I don't want fickle comments from you that I'm targeting. And if none of this applies to you, don't take it personal. Jermaine Jackson, 1998, I believe. Don't take it personal. Just understand that there's these naysayers over here, and I need to deal with them first because it's important I get it out of the way. With some of the responses I'm going to hear. You didn't look at it deep. I looked very deeply into the project. I looked backwards and forwards. I spent hours, literally hours, making sure to do as much analysis as possible for something that's not live yet. And I can read code. You probably can't. Because I can read code, there are things I see. However, you're just making it up deep. If you knew how to read code, you would already know that these things are true. Since this is not live, I can't show you the scan results. Otherwise, I'd show you the scan results at marketmove.ai, a fantastic tool because this looks like it's going to be on the Binance chain. And then I would prove to you that what I'm saying is true and legit and make you feel stupid. I can't do that yet, but when I get there, trust me, I will make it an effort to make you look foolish because I can read the code and you can't. You're just hating deep. I don't hate any token. There are tokens that I don't believe in. There are tokens I think are garbage. There are tokens that I disagree with. I don't hate anybody. Hate is a strong word. Rather, I want tokens to get better and stop their suckage because there's a lot of tokens that suck. We all know they suck. I would like to work to make tokens better. Let's make tokens great again, as to use a term. You just like Libero deep. Frankly, Libero has still performed the way they told me, even regardless of the red. So yes, there is that part of it, but Libero has nothing to do with the coverage of this token. That token, of course, being the so-called Safuu protocol. Safuu.com, SAFUU.com stands for Sustainable Asset Fund for Universal Users, which is a BS statement, just to put it in perspective. This one has had so much hype. This one has had so much outreach. So many people have wanted me to talk about this one. Why? Because they came with an absolutely unrealistic APY of 382,945%, and they're trying to understand if this is legitimate. They're trying to understand if this is a real thing. They're trying to understand if this is a scam. The first thing I'm going to do, folks, is I'm going to break down what this is doing and how they're pulling this off, because it's ultimately what I like to refer to as an okie doke. All they did in order to get this APY, and I argue that the APY is probably about accurate, but there are a lot of assumptions to it. Safuu has a heavily constrained inventory, more constrained than almost any other token that's out there right now. Because of the constraint of inventory, while it is true that the APY is accurate, it makes assumptions about how many of those tokens you'd have to hold in order for that return to be of any value to you. I will tell you what I mean in a second. Let me break down the tokenomics so you understand what this is doing. This project has a automatic liquidity function. It's called burn and liquidify. That's what that's referred to. And what they refer to as an insurance fund, which I'll get to in a second, a treasury fund, which I'll get to in a second, and a fire pit. And I'll get to that in a second. They then do a comparison between them, Titano, and Libero, which are the three big ones in this space. Their matrix of comparison, there's a little bit of inaccuracy in what they say. I'll let them slide on the things that they flagged that are not really true and accurate. However, the summary to take away is that they're presenting themselves as the best of the best. In some cases, they're fair. In some cases, I don't think it's true. Regardless, they present themselves as better than these other two projects. Fees of 14% on buys and 16% on sells. I'll get back to that in a second. You're going to love that. They apparently have been KYC'd by RugDoc. RugDoc will not release the results until the thing goes live. I don't necessarily rate RugDoc. They also call out AssureDeFi. I don't necessarily rate them either. However, I acknowledge they say they are KYC'd, and RugDoc did confirm they performed a KYC of some kind. But without seeing the actual document, I have no idea how valuable that KYC actually was. They do a lot of details into how they are trying to sell themselves as not a rug pull. They presented to say they don't have a whitelist. We'll come back to that in a second. And they present themselves as trying to be legitimate. And they're trying to facilitate growth and separate themselves from everybody else. And they have a lot of positive speeches. They have a lot of things trying to tell you, look, we're here and we want to make this work. And we think this is a strong build. And we think this is worth your time. And like everything we see here is designed to convince you this is a legitimate project. Then they go into details here about answering the question directly. How do I know it's not a rug pull? And I'll call out one sentence here. Let's use logical reasoning and compare with how much revenue the Safuu Treasury stands to make from fees. And quote, it is in the team's best interest to have Safuu continue for the long term. More traders, holders, and volume equals more revenue and profit for the project and everyone else with a higher token value. The keywords there are higher token value. I'll come back to that in a second. And if you're getting frustrated with me coming back to things, it's because it's important that I give them a fair shot. Number one on the list, and let me call out the naysayers up front. It doesn't matter, deep. I don't care what you say. I'll explain my logic when I tell them that their white paper is garbage, not the content, but the fact it's in the garbage Git book again, and they don't have a PDF, which means they can edit it at any time, including prior to them going live, which makes me distrust all the things they just said on their website because they chose not to give me a PDF that would have defrayed that concern. They chose not to put it out there. They made an active decision not to create a PDF, and they clearly spent time on this Git book nonsense. Some of it's copy paste from the site, but a lot of the data, I can tell they put a lot of thought into it. My concern is they should be a flat PDF that I can download now. So when the project comes out, I can compare and see what they edited, trying to be, as Zab Judah would say, slick with it. I don't know. I'm not going to keep checking Gitbook every single day. So that's already number one. You're already on my hit list with an S because you didn't believe in giving me a PDF that I can hold you accountable for. Now, for some people, that might be a minor thing. For me, it's a major thing because I frankly don't trust any of these tokens. As I said on a previous episode, sometimes these hoes ain't loyal. I'm not saying they are or not. I'm saying I don't trust them till they prove that they are. That's how I feel about it. Moving on, they gave a link to their GitHub, which gives access to allegedly the smart contract that's going to go live. I always like that they give access to the code so you can review it and take a look at it. And if you know how to interpret the code, you can try to identify things that you believe might be of concern. Now, the caveat of this is we can't necessarily know what is or isn't truly a concern because we don't know what is or isn't going to be used until the contract goes live. The reason that comes out and why I believe it's a concern for me, I talked about a heavily constrained supply. The token supply is 325,000 tokens. This is how they're powering such a high APY it's based on the fact that there's only so many tokens. In theory, this means that the price should skyrocket well surpassed, but certainly into the tens and even possibly hundreds, depending on the popularity of what's happening. We already know because of their advertising of this outrageous APY, there's going to be some FOMO buys on this thing. They already opened pre-sale through Pinklist. So we already know there's going to be significant amounts of FOMO buying into this thing. It's going to jump. It's going to skyrocket. And I guarantee you, you got the same notorious shillers that ain't worth, almost cussed, crap, that ain't worth nothing. They're already in this, hyping it and shilling it to the moon, deep, deep. And then they already have bags and they're waiting to press that button to sell. Now, the rebasing mechanics that they have and their treasury that they allege and all these things designed to preserve value may very well help you if you bought into the token, preserve the value that you invest in. That may work. It may not work. I can't say because it's not live yet. However, in theory, the mechanics look sound on the surface to be able to preserve value if you chose to take a risk. However, I consider this dude as one of the super high risks because of the constrained inventory. And you're like, wait a minute, isn't scarcity a good thing? It should be, except for the fact that they're doing the pre-sale. Doing a pre-sale automatically means you're going to have people who buy in and they dump that bad boy to take the profit and run because they don't care about the project worth of nothing. Two, even post pre-sale, when this thing goes live, you're going to have so much FOMO post live because you're going to see that graph on Dex Tools and other places and PooCoin that it's instantly going to be a chaotic situation. You're going to see unreasonable, I predict, unreasonable levels of growth. You're going to see so many people buying into the thing. And then at a point, the price is going to become unreasonable and then it's going to taper back down again. They're going to do the rebase. The value is going to try to stabilize and it's not going to stabilize enough to drop the value enough and it's going to start tanking again. I also believe that with the war going on right now, it's going to have huge volume up front, and then people are going to be, move on to the next thing because they're going to see this is just a high-risk pump and dump. I'm not saying it is. I'm saying that's going to be the perception based on the price movement. This is the prediction that I have because it has a heavily constrained inventory. I would never support an inventory that's this low. I understand why they did it is because it was the only way they could get an APY that looks the way that they present it. I don't think it's sustainable. I think it's dangerous personally. I wouldn't personally do it myself. You need to make a choice for yourself as to whether you're willing to engender that risk. I can't tell you what to do or not to do. I'm saying for me, I personally would not do it because of that risk of pump and dump. It's a huge, high risk situation. And I question how they're going to be able to give back to the holder. See, the one thing about Libero is as you buy and you hold and everything else, you're getting reflections sent to you on a regular basis that in conjunction with the rebasing helps stabilize your value. From what I see of the tokenomics here, I don't see that there's any reflection sent to you as a holder. And of course, because the inventory is so slim, that doesn't surprise me any. But my point is, without that reflection mechanic, I'm not confident that they're going to be able to persist your value very strongly as Libero's has been able to do. I'm talking your basis, not the price that you see on the graph. I'm talking your individual value. Libero's, the way it's built, seems to have solved the problem of a loss of value because of the reflection and the rebase, rather than just a rebase by itself. That's a delineation that I said, remember, I felt that their matrix was misleading because it does not call out the fact that the rebase is only a rebase and does not include a reflection to support the rebase and persist the value. So it actually is a negative. If it's true that there's no reflection, I'm pretty sure there's not. It's a negative that you don't have that because all you're really doing is throwing away value at that point, and the rebase might actually harm you down the road, similar to other tokens that are out there that only do a rebase like Ampleforth. Ampleforth had a significant jump and then it tanked and it's never recovered since because standard rebasing by itself is inherently a loss of value as people get tired of it and they lose that psychological effect. That's what I suspect will happen here. I have no proof of this, but that's my theory. That's my prediction. You are free to hold me to it. And if I'm wrong, great, but that's what I see. Looking at the contract now, there are a number of functions in the contract that gave me some concern. On the page, they say they don't have a minting capability. However, directly in the contract, line 169, function mint. So you either do or you don't. You actually do have a minting function. It is there. So why do you say that you don't? Chances are they're saying that they would never use it. The problem is because it's there, the owner could use it, and you don't have in your page an intention of renouncing ownership. Thus, I don't trust you not to mint. but I do see a function mint. This function is a true function there. So if this is the contract's going to go live, there is the ability to mint tokens. If you remember my coverage on Titano and the whole issue they had with the recent loss of liquidity, they called out, CertiK, when I say they, called out that minting had been called prior to that issue by the owner address. And apparently, Titano had told investors they got rid of the minting function. The minting function is harmful because it can actually cause a decrease in your value. The fact that a minting function is here doesn't surprise me because ultimately that level of constrained inventory tells me that at some point they're going to look at it and say, oh crap, this is too low. We're going to have to do something. We got to get more tokens. And they would have, the only way to do that would be mint or move to a new contract. So it doesn't surprise me to see it. It disappoints me that their website claims there's not one when there clearly is one, unlike Libero, by the way. Going down the list, I see a function, line 200, remove liquidity. This concerns me. And then below that, line 209, remove liquidity ETH. I understand why these are here. They would need to be here in order to support the rebasing. The problem is that because the owner contract wallet is still in there, that means that the owner could theoretically remove the liquidity. If they remove the liquidity, that's a rug pull, ladies and gentlemen. I understand what the devs will say. We're not going to do that. The problem is you have functions in the contract that allow you to do it, and we don't trust you because you put it in the contract that you can do it with no clear intention to renounce ownership to stop you from doing it. We don't trust you by default. I certainly don't trust you by default. Nobody should trust you by default. You should earn the trust. You earn the trust by not having functions written in here of this manner, or you bake it into the rebase function as a sub-function and prevent the owner or any other address from executing that function. I don't see that in the contract. If it's there, I want the smoke, but I don't see it standing here right now. Going down the list, lines 423 through 428. Liquidity fee of 40, treasury fee of 25, insurance fund fee of 50, sell fee of 20. Fire pit fee of 25, a sell fee of 20. Folks, why don't we go back to their site and see what their site says in terms of the fees? Well, their site says that the fees are 14% on buys, 16% on sells. So if it's a 16% sell fee, why do I see uint 256, that's an integer for those that don't know code, public, which means everybody should be able to see it, including that executes the code, and something called sell fee of 20. 20, I'm sorry to inform you, is higher than 16. It's only 4, deep. I need to make sure you naysayers understand that when you have a discrepancy of any kind, regardless of how small, it should raise a concern. You are free to treat that as a non-issue. I will call it out as a concern because it means that they are lying to you. I would like to understand why. There's probably a good reason, which is chances are this is a sell fee for something else. That's fine. Your code should call out, and you don't have any comments in the code, by the way, which is another yellow flag for me. But your code should call out, this sell fee is for what? Then we can test you against it, because when it goes live, we should see that the sell fee correlates to what you sell on the website, or more common, your website is out of date and you didn't bother updating it and you changed your mind, which goes back to my complaint about the fact you're using Gitbook, where you promised a thing at point 1 and then you made a change and then you slightly surreptitiously updated that Gitbook to change that sell fee to 20 and you forgot to change your website. Regardless, you have a discrepancy in the fees that I don't think is acceptable because you're promising one thing and it's something else. Everybody else that naysays that and says, not a big deal, deep. I don't frankly care what you think. I'm calling out what I see. Anytime there's a discrepancy of any kind, it is a concern. It should be a concern to you. However you treat it in terms of priority is irrelevant. The point is it's a concern that there's a discrepancy because it possibly shows malicious intent, that they're possibly trying to rip you off. I don't know that they are or not. That's why I'm calling it out. And if they want to come on the show and talk it out, I want that smoke and we can clarify it. That's all. Now, here's one thing I'll call out that they did right in the contract that I think if you choose to buy into it, should give you cause to celebrate. It does appear they have an anti-bot mechanic. If you have heard my episode on Lily, I said that bots are the worst thing to happen to tokens because when you go live, they immediately get swarmed. I do see an anti-bot function in there that should theoretically prevent that from happening. I do see that they did some successful testing already a couple days ago, getting ready for this to take place. I don't see that there's anti-whale. So in theory, somebody could buy up the entire stock of the thing based on the initial price. I wouldn't be surprised, but I doubt it. But it's possible because I don't see anti-whale. Maybe it's there, but I don't see it. And it's on their site that there is anti-whale. And the wallets for the treasury, I don't see any issues necessarily with the wallet addresses of what I can see. So my point is, fundamentally, I don't see anything wrong, but I see that there's sustainability issues with what they're promising. I feel, and then the other thing I'll call out with sustainability, in their explanations, they talk about the fact that the treasury basically constantly gets replenished and everything keeps getting replenished from the activity of people. So they're banking on activity, constant volume, constant activity, as we learned from other tokens. That's very hard to sustain. If you're basing the treasury, and the treasury is what adds the stability, and you're banking everything on that one, you're making a lot of assumptions about people's tolerance for this project over time. I can't say that it will or won't succeed. I will say that everything I called out as concern are concerns I think should be resolved, whether that means your website's out of date, whether that means the code's out of date, or your white paper's out of date. Something's either out of date or misrepresented, and all that needs to be fixed. My gut tells me that this is an unsustainable project, meaning that it's not going to be able to sustain its success beyond a certain point, and it's going to hit a capacity, and it's just the supply is too constrained. That's my theory. I have no evidence of any of this. I'm basing it on the numbers and every point I see. It feels like it's just unsustainable. Like the best analogy I can put to this would be if you have a bunch of houses, right, and a bunch of people take out loans for these homes. And after they take out loans, the houses just jump in value because of a constrained inventory of homes. So now there's high demand. And so the value of the homes, the appreciated value of the homes skyrockets, and you get this equity. And because it's above and beyond the loan. And people use their homes as ATMs, and they take out the equity from the home, and they go off and they buy other homes and they flip them, and then they keep doing this. At some point, that bubble's going to burst because it's not sustainable. Whether that's because of people running out of money, whether that's because of like war, hint, hint, wink, wink, whether that's because of regulations, like there's all these different things where that bubble can't sustain, it's going to pop. That's what I sense here. I can't tell you when. I can't even tell you if. That's just my gut speaking based on the numbers I see. If you want to buy into this, it's on you. My summary statement is, this is an extremely high risk investment. I would argue this is a higher risk investment than most of the dog coins. And you're like, what? It's because the amount of value you could theoretically lose, I'm talking realized loss, is equivalent to a Squid Game type thing. Because if that bubble does pop, the value would have already skyrocketed to a certain degree. Now, if you toss in like $2 or something, I don't know, and it jumps to like $2,000 and you're still sitting on it holding it, and then it pulls, you only lost $2, right? But let's say somebody gets greedy on this and they're like, you know what, I'm just going to toss $1,000 or $10,000 on this thing. I'm saying that the risk of losing is higher on this than some of the dog coins now. If you still choose to take that risk, just make sure you understand it's a risk. Do not YOLO into it. Please do not hold. Take profit, and that's your test. As long as you can take profit out of it, I would advocate you take profit, and I would not leave a lot of money in this thing and just watch it over time. The other things I would look for would be a CertiK audit, which I don't see here. I would look for a Desert Finance audit because it is Binance Chain. I would want both. I'd want to have a strong analysis of that happening on something like this. I understand they say KYC. I think they should have their identities on the site so we know names directly on the site and not just a third-party thing. That's what I would want, I would expect out of them, is they would put their names up there, put their name up. And we should see some LinkedIn. We should see more data about their background. What do you have, financial degrees? What background do you have that tells you this is going to be sustainable? I would look for that, absolutely. That, Certic, Desert, all those, 100%. They seem to be pretty good on social media, but that could all be marketing hype for all I know. Some tokens are good on social media, but there's not really anything behind it. So I can't put too much credence on that one. To me, it's show your face, show your name. I'd like LinkedIn's if possible. Desert Finance audit, Certic audit. I want to see those. This is one where liquidity should ideally be locked. Absolutely. This is one where I think owner renounce is vital. It's like required in my mind. They're probably not going to do it because they need to manage the fee balancing, especially with the rebalance mechanic. That's my gut. They'll say they can't renounce the ownership. And I'm not saying they do it up front. I'm saying that there should be a roadmap for them to do so. They don't have a roadmap at all. So I have no confidence that they are or are not going to do that. Again, let me summarize and close for the naysayers. If you want to buy into it, you buy into it. I'm sharing what I see as an investor. I don't plan to buy into it. It might go to the moon, deep, 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 but I don't trust it until I see those fundamental things, audits, and then them faces, names, and an explanation of these functions like minting, right, and removing liquidity and the fee discrepancy. I think those should be resolved. The white paper needs to be a PDF. Like there's fundamental basic things that I see lacking. As a result, I personally am not going to invest in it. If others want to invest in it, by all means.